Form 3922, which is used to report ESPP transactions to the IRS, was released more than 10 years ago, but we still get a lot of questions about it from NASPP members. In this video, I'm going to answer 5 of the most common questions that we receive. Let's take a quick look at the form itself. So one thing I like about this form is it's really complete. You can see it has all the information that an employee would need to report an ESPP transaction on their tax return. Another thing that I really like about the form are the numbered boxes. That makes it really easy to explain to employees how to use the form when they're reporting their transactions. In fact, the NASPP has created a really handy flowchart as well as a sample FAQ that you could use to create your own employee educational materials, and you can bet on those documents we refer to all the box numbers. Let's just cover a couple basics before we get into the common questions. So like I said, this is used to report transactions in a Section 423 qualified ESPP to the IRS. And it's triggered, the filing is triggered by the first transfer of legal title of shares acquired under an ESPP. Now that phrase, first transfer of legal title, is kind of confusing, but the IRS has clarified it for us. If you have an ESPP where when employees purchase shares, the shares are immediately deposited into their account at your designated brokerage firm, then the purchase itself is considered to be the first transfer of legal title. You'll do the Form 3922 in the year of purchase, and then you're done with it. The deadlines to file the form: if you're filing on paper, you need to file it by February 28th. If you're filing electronically, you have until March 31st. You also have to provide a copy of the form to the participant, or you have to provide a substitute statement that has all the same information. That participant statement needs to be provided by January 31st. And if any of these dates fall on a weekend or a holiday, you have until the following business day. So now let's talk about our common questions. The first question that I get is, do we have to provide the form for people who live outside the United States? If you are a multinational company, you probably have a lot of non-US employees who participate in your ESPP. They don't benefit from the preferential tax treatment that's afforded under Section 423, so the form itself is not all that useful to them. Do you have to provide it to them? And what the IRS says in the instructions to the form itself is that you do not need to provide this form to non-resident aliens, provided that the company has not been required to issue a Form W-2 to those individuals at any point during the offering, any calendar year from when the offering started until the purchase occurs. That means that you do have to provide the form to U.S. residents, and you have to provide the form to U.S. citizens, no matter where they live. Second question that I get quite frequently is about rounding. On the form itself, shares have to be reported as whole shares, even though a lot of you probably have ESPPs where employees can purchase fractional shares. Likewise, the dollar values on the form have to be rounded to the nearest penny, even though a lot of you probably carry those values out more decimals than just a penny. The IRS has said that share amounts should be rounded using a true round. That means up for 0.5 and above, down for 0.4 and below. They haven't provided any guidance on how to round dollar values, but I think it would make sense to do a true round there as well. I do sometimes encounter NASPP members who are really reluctant about rounding up on the share amounts because they're really concerned about reporting to the IRS that employees purchased even just a fraction of a share more than what they actually purchased. And in that case, I think it's probably okay to round down. I just don't think the IRS cares that much. I don't think they're doing a whole lot with these forms, and I think they view the rounding as an immaterial issue. Another thing that I encounter is that sometimes companies are really reluctant about rounding up on the participant statement because it won't match all the other statements that participants have gotten. In fact, sometimes what can happen is that if you round up on the participant statement, then the participants will tell you made a mistake because it doesn't match their confirmation of purchase. And in that case, again, I think it's okay to round on the statement that's filed with the IRS, not round on the statement that goes to the participant. And I just don't think the IRS cares. Make a policy, be consistent about it, and I think you're going to be fine. Third question I get is about the account number. You can see in the lower left-hand corner of the form, there's a box labeled account number. And this is really kind of a misnomer in terms of a label on that box. It really should be transaction number. That's what the IRS is looking for here. It needs to be a unique number assigned to every purchase by every person in your ESPP. It's used for corrections. If you have to file a corrected form, the IRS will use the account number on the corrected form to match that correction to the original filing. And they don't provide any guidance on how to assign account numbers. It's really up to you to come up with your own system. I think a best practice is to concatenate the employee's ID number with the purchase date. Most employees only purchase once on each purchase date. So if you combine those two things, you end up with a nice, unique number for every single purchase that's easy to remember. You can come up with whatever system you want, though, if you have some other system that you want to use. The account number can be up to 20 characters, and it can be numbers or letters, and it can even include special characters like hyphens. The fourth question I get is about the Social Security number, and it's whether or not you can truncate or mask the Social Security number on the statements that you provide to participants. Now, for the filings that you do with the IRS, you obviously cannot do that. Those need to contain the full Social Security number. But for the participant statement, the participant already knows their Social Security number, so it's not helpful information for them. And most of the time, these participant statements are distributed through the U.S. mail. And anything that goes through the U.S. mail, you generally don't want to include information like Social Security number on, because what if it just happens to end up going to the wrong destination? What the IRS has said is that it is permissible to mask the Social Security number on the participant statement. You can do it by replacing the first 5 characters of the Social Security number with either an asterisk or with the letter X. And the last question I get is about return statements. So you mail out all these statements. Some of them are bound to come back with an address unknown on it. And what do you have to do with those return statements? The IRS has said that if you have a better address for the individual, you should remail the statement to that other address. So I do think it behooves you when those statements come back to at least check with payroll and HR to see if maybe they have a better address than you had. But if they don't have a better address, nobody knows where the individual is, maybe it's a former employee who hasn't been keeping the company apprised of where they live. In that case, I don't think you need to do anything with the return statements. And that's my quick guide to Form 3922. I hope that you found this helpful. And you can check the description below for more resources on this topic and for more information on the NASPP. And be sure to follow our YouTube channel for more of my quick takes on equity compensation.